we've got to talk about Nvidia. There are some chart setups developing that don't even look bad. They look outright dangerous. The Nvidia permabulls will hate what I have to say, but you gotta face the facts and look at the charts. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. So, if you follow this channel, you know that I have been bearish on the Philly Semiconductor Index and a lot of the chip stocks for the past weeks. And I've told you that the reason why the chip sector and the SOX index hasn't collapsed more is that Nvidia has held up really well. And because it's the heavyweight in the index, in the SOX index, that has held up the SOX index. Now things are changing. Look at the chart. This is the Nvidia chart of 2024. Great performance year to date, no doubt, about 160% up. Amazing. But look what we are seeing here. This overall is one of my favorite setups for short swing trades. So first off, uptrend still intact. Let's not forget about this. We're talking about a correction in the uptrend. You see the uptrend, higher lows, we're making higher highs. All right, so the overall setup is bullish. But as you can see, within this overall structure, we're now developing more and more bearish signals. Bearish signal number one, this short-term uptrend, which was started in September and has run through November, now broken. Broken, retested, confirmed. Bearish signal number two. We reached these new all-time highs. We corrected to the lower end of the uptrend channel. That is fine. We had this here. We had this here. What happened afterwards? Rally, new all-time highs confirmed. Rally, new all-time highs confirmed. We tested the channel, the lower end. Rally did not confirm. As you can see, we only went above it intraday. Then we had this long wick sell-off, confirmed, broke the uptrend. Bearish signal number two. You obviously see bearish signal number three, the most dangerous one of them all. The forming of a head and shoulders. Now, this head and shoulders hasn't triggered. That'll be the final trigger. All right, this is four already. Four negative factors on Nvidia. Fifth negative factor, we have a clear negative divergence of the RSI. Look at the RSI, it's getting weaker and weaker, drop below 50. This is why we have this red downtrend line right here. But if you look up at the chart, you see that the Nvidia stock at the same time kept going up. This is called a negative divergence. It's a warning sign that the share prices have a higher probability of going down in the future. There's weakness underneath the share price action. The dynamic is fading. So the share price is going up, but the dynamic is fading. Now, this is the situation. The trigger point is this purple line. This is what's called the neckline of the head and shoulders. If we break this and confirm, then it'll trigger the head and shoulders. That'll be the final nail in the coffin for a heavier correction. Where would that lead? Well, the first target zone would be this blue line because as you can see here, we have an open gap from the beginning of October. Now, if we do let's make a measured move and figure out how far this correction would go. For the measured move of a head and shoulders, we take the highest point of the head right here. We draw it down to the neckline. That gives us about a 13.5, 13.6% correction. So from this trend line, we're now going to do a measured move down 13.6% and see where this leads us. And look at this. This leads us almost exactly to the penny to the gap fill. As you know, I'm a big fan of different chart factors coming together. As I showed you right now, head and shoulders, no confirmation of a new top, break of the uptrend, negative divergence in the RSI, four negative factors on top. That gives you a higher probability that this trade will play out on the downside. The trigger point being when the head and shoulders breaks down, when the neckline is broken. That's when you get in on the short, and then the short will take you to the gap fill down to 118. Now, this doesn't change anything as far as the long-term uptrends of Nvidia are concerned. But what will happen is that if you get in around 130.50, if you're more conservative, you want to wait till this breaks here, so 128 or so. So it gives you a nice, like 5-6% downside, which is nice for a short trade, especially in an uptrend. But what will happen is, if Nvidia goes down, it will drag down the stocks. This is the Semiconductor Index. This is the setup that I'd shown you. Even worse than Nvidia, we have a double head and shoulders. I've shown you this for weeks. I told you that you rarely see that. We have a downtrend that's confirmed. We have an uptrend from August that's broken. The break is confirmed. As of yesterday, we sold off a strong early day, which was mostly Nvidia. As you can see here, we made new 5-day lows. If we put in some moving averages, you can see we broke the 50. We confirmed below the 50. We hit the 20. Once we break the 20, then things are getting really, really dicey for the SOX index, and then this correction that I've been telling you about for, I think, like 2 weeks now, is starting to play out as it is showing and setting up in the charts right now. And obviously the trigger will be Nvidia. If the Nvidia stocks goes down, so does the SOX, because Nvidia is the heavyweight in the index. So be very careful. If you're a short trader, you can either short the SOX or you can short Nvidia based on the signal in the Nvidia chart if the head and shoulders triggers. If you don't like to trade shorts, you just trade longs. Make sure you have some stops in place, or you take some partial profits. Now, there are certain individual chip stocks that are still looking way better. Broadcom is looking good, for example. The money's kind of rotating within the chip sector. They're trying to find the chip stocks that are good to hold them up, to hold up the index. But if Nvidia goes down, there's no holding up the index. That's it for today. Talk to you tomorrow. Bye-bye.